story of the morning has got to be gold. Gold, new all-time record highs again, and silver, probably more silver. Bigger move in silver, almost 3%. Now trading 74.39. So big moves in the big shiny rocks. That is for sure. I didn't really see anything on the tape that would indicate why, other than, there just seems to be a extremely strong push to get long gold and silver, and to a lesser extent, even copper as well. But very interesting. Those all continue to be very strong. What I think is really interesting is if you come in here and do one of these jobs. Is it this one or this one? You do one of these auto fib extension things, and you zoom in. So we can pull this. I think you have to do this first and then pull it down. You see, we do have levels up here, 70, 76, 64, 80, 72. And these are just some of the extensions here out. 84, 72, and which one is that? That is the last one. That's almost 487.25. So just interesting, whether or not they're achievable or not. But there you go. And that is the auto fib extension. Auto fib extension. Which is, it's a nice tool to use if, when you are looking at something that is at all-time highs. I mean, there's really no way to get any kind of picture or forecast of where things will go. Same thing with the gold. Some real 4,600. I think this might max out at like 48. Yeah, 48,880. So some crazy numbers there. I can't bring myself to get. I mean, I've already gotten out of many of my. I have stuff that I've had for a long time. Those positions I'm not, but as far as like my trading and options positions, I got out of mine all last week because I kind of thought a lot of this was at least done to a point where I kind of expected it to cool off, but hey, who knows? Pedal to the metal, I guess. So, and who am I to say if you're long, stay long. Keep doing it, doing whatever's doing. So that's pretty much the story of the day. Not really seeing a ton of volume overall in the major indexes. It does seem like all the money is kind of flowing in the metals. And to another extent, many of the chips are really making a pretty significant push here. We got SanDisk up almost 3.5% this morning. We got Micron up like $1.50, almost 2%, 1.5, 1.6. NVIDIA, Broadcom, AMD, and Intel all up as well. To name a few of the movers and shakers. And then some of the metal stocks as well. I see Freeport-McMoRan is making another move higher. This stock has really been on a absolute tear. And Freeport-McMoRan is really nothing more than a copper kind of surrogate. If I were to kind of place it, that's majority of their business. But this stock has been on fire. And that seems to be where the money is somewhat flowing today overall. So big shiny rocks, metal mining, chips, and there you have it. And then even Bitcoin really didn't move at all over. Really not much movement here at all. You know, even though it's up 1,000, it's up 2%. Overall, it really has not gone anywhere. Did not do much of anything yesterday at all. Pretty much chopped around. No economic data. And then supposedly today is a historically positive day. The day after Christmas is apparently being touted as one of the most profitable days. I shouldn't say most profitable. Usually the decent amount of upward momentum, which kind of makes sense, right? After Christmas and light volume, kind of drift type of stuff. And that's about it. You know, it's kind of hard to really kind of put your finger on anything today. Just doesn't feel like there's any real pulse of anything. You know, you're kind of late to the game. If you think you're going to go and trade gold and silver today, you're probably going to get run over. My opinion. Even though they are higher and they're moving and they look strong, you think you're going to come in here and short these. I just think you're going to get your face ripped off. It's just my opinion. And it's likely because there's just nobody home. There's just not enough volume. I will say, though, that as far as the ES is concerned, gold and silver have both traded more contracts today than any of the major stock indexes, which is nuts. I mean, that just tells you just how light the volume is. I mean, right now we've done about 80,000 contracts in gold and about 76,000 in silver. And on the ES, we just barely cracked 52K. So should be interesting. And then as far as, again, I don't really see myself doing much of anything today. I still going to continue to lean into a little natural gas. I still like this long, even more so. I'd like to see it, again, like I said, I'd like to see it come down a little bit. And I did find a couple of ETFs. I did find it's BOIL. That's the one I was looking for the last couple of days this week. I said it's BOIL. BOIL, and that's the Bloomberg, and it's actually a leveraged. I didn't realize, so it's a two times. It's a two times natural gas. But then when I actually drilled in, I looked, and the volume on the options really is not. It's really not terrific, and the spreads in here are kind of horrific. As well. The spreads are pretty bad, especially for a ETF that's $25, and some of these spreads are like 40 and 50 cents. That kind of sucks. But nonetheless, though, that's one of them, and then the other one. Let me see. I put them in here. I put them in my list of ETFs. I think it's like FG something, FCG, First Trust Natural Gas ETF. This one didn't really look much better, honestly. Now I know why I forgot them, because they both looked like a grap. FCG. So anyone wondering, these were the two. There were some other ones. These were kind of the two that looked the most interesting, as I should say. But again, this was another one. I went and looked at the options, and I'm like, these suck. These stink too. And so if you're going to trade any of these, it's likely that you just buy it if you want to go long. I don't know how liquid they are, either one of them. I think BOIL is probably a little bit more liquid. But as far as trading options in either of those, you're kind of screwed. And then I was looking at the UNG again, and still getting a little frustrated. Like, I really don't want to trade this thing. I just don't like it. And again, I don't even really like trading natural gas future options. Honestly, I don't. There's just a lot of inherent risk and issues trading around with natural gas in general in the futures, and I don't know, but it's kind of weird because I just feel like there's so much opportunity here, and there's not really a lot of opportunity elsewhere, and so it is a little frustrating that you can't take advantage, because look at this, volatility continues to be really high in here. So anyway, that is I guess that's it. Short and sweet today. And not likely to do much of anything. Was looking at bonds as well. Didn't really see. Bonds had a nice, like I said on Wednesday, bonds had a nice recovery and continue to have a nice recovery. And we are getting up, and we have broke out over our ascending triangle here. And so I do think even on the long end here, we have some runway to go on bonds. And as I said, I like the shorter end better than the 30-year, because it looks like it actually, just from a chart perspective, it does look a little healthier. And then, again, the bonds are another thing that there's not a hell of a lot of ways to play this. Most likely it's going to be TLT or TBT. I don't do TBT. I know there's a number of folks that trade TBT. TBT is actually the inverse. It's an inverse ETF. And so anything you do in here, you would need to do the opposite of what you would think is going to happen, which again is like, I don't know, to me it like overcomplicates. I mean, unless you're going to just outwardly buy or short this thing, and I don't think you're going to be able to short it because it's hard to borrow. But I just don't see any reason why you would do that when you can do the same thing. I think maybe the attraction to it is that it's like a ultra short, so it's not like it's a 1+. It's not exactly a 2 times, but it's an ultra short. And I guess if, I don't know, if you're playing some kind of weird strategy, I guess maybe it has some. I don't know. I haven't really seen any need to use it because if I want to go short bonds, I could just use TLT. But I do like, you see here, I'm out in September. I do like stuff out in March. And I have a ton of this already. And I think if I was going to get into a position here, I would probably go up to the 90. I would probably go a little out of the money on these. And the nice thing about this is that I can actually just buy the stinking calls, right? Without even having to do a spread. Just go and buy the 90 calls, sit with them, and, go for it. If you want to make it cheaper, go right ahead. You can do a spread, do like a 90-95. It's real cheap. And I would play it that way. I mean, if you want to do the long end, I like the IEF, same duration. I do like out March. These are a little more expensive, but even still, I would actually go in the money on these, and again, just buy the puts. Buy the calls here at 95 because there's not enough volatility to sell anything, and just buy the 95s. Get a little intrinsic value, and maybe go that route. All right, and that is it. I'm going to make this more painful than I need to. So, basically bonds, and I'm likely going to do those trades today, right? I'm going to buy the 95s in March on the IEF and buy the 90s on the TLT. 2 simple little dinky things. And just start getting a little long some bonds. All right, and then that is it. Have a good weekend. Enjoy the day, and I will be back.